Hello, traders. It's Sunday morning, about 8 o'clock in the morning, December 3rd. I start every one of these videos with a review of the previous pick that I had in my prior video. That's how you can gauge how successful this trading system is. AFRM was the stock that I highlighted. We're going to get to that in just a second. I've got some exciting news for you. Wednesday, I'm going to stream my first live event on YouTube. So we're going to get that link up Monday or Tuesday so that you'll be able to register for it and sign up for it. I'm going to have a special guest. Harry Selden is his username. Harry runs my chat room. In addition to being a phenomenal trader, Harry posts his trades publicly. He started a Reddit, the Real Day Trading Reddit. If you haven't gone to it, you should go to it. It's a free resource. He has hundreds of articles on how to successfully trade. He's one of the most selfless traders I know. He's trying to help lots of people learn how to do this professionally, and he does it professionally. He also happens to run my chat room. Harry is posting his trades real time during the course of the day, along with many other phenomenal traders. And when you come into the chat room, that's what you see. Dave Wise doesn't work for OneOption. He likes the community, just like Harry likes the community. This is where we go to be serious about trading. So we try and help other traders after hours when we can, but during the day, we are laser focused on finding great trades using this systematic approach. So I hope you can join us for the live event on Wednesday. We plan on doing these every week. So the one on Wednesday, we're going to do about 2.5 hours into the open. So we'll be able to go through, find some trades, see what the market's doing. I'm going to be focusing a little bit more on swing trades. I'm going to be doing that in this video as well. Now that the market has started to settle down, I feel that we're going to make a new high of the year. We're going to have some really decent swing trading opportunities on the long side, which is where most traders like to trade, is on the long side. Because if you look at an 80-year chart of the S&P 500, what has the market done? It's gone up. So now that we've had the bear market, we've had the Fed tightening cycle that has started to pass, inflation is starting to abate, we have the right backdrop to start doing some bullish put spreads, or in some cases, sell some naked puts to acquire stock, or perhaps even buy some longer term in the money call options. In 2024, I'm going to be focusing much more on swing trading. That doesn't mean that we're abandoning day trading. The day trading audience is probably 1% the size of the swing trading audience. And day trading requires an incredible amount of precision. It's very difficult. Swing trading is a little bit easier. Swing trading, I guess if you're going to make an analogy, would be like dropping a bomb out of an airplane. You don't have to be exactly right. You just have to be generally right, where day trading is more like a sniper. You get one shot. And after that one shot, they know where you are and they take you out. So you have to have everything lined up perfectly for it. One method, much easier than the other. So let's take a look at our last pick. AFRM was the stock that I highlighted on Wednesday. This is the price action Wednesday. We were looking to sell the 2750 puts, December 15th expiration for 50 cents. Let's see if we can bring those up, and we'll take a look at where they are now. Those are the D's 2750s. They're 10 cents by 16 cents. I believe when the video came out, you'd have to go back and check. They're about 30 cents bid, offered at 35 cents. I wanted to get 50 cents for them. Well, the stock didn't cooperate with us with respect to having a tiny little pullback into this green bar right here. It just kept going higher. Great stock to day trade. Still would be looking for a little bit of a pullback, but the reason that I liked AFRM Look at that breakout we had through this resistance level. That's a high plus. We also have a high plus coming into play right in here. But most importantly, if we zoom out and take a look at all the major moving averages, so let's put those up right now, the stock was blowing through all of them. And there you can see it's above the AVWAP-E, the 200, the 100, the 50-day moving average. I'm going to remove the 20-day because I really don't use it. And you can see how the stock has been able to continually grind higher and get through this significant resistance level. Holiday shopping is good. People are using AFRM for layaway. That's the type of business model that they have. There are plenty of jobs coming up. So this stock has been able to grind higher. And if I had a chance to buy it at this breakout, that was my intent. By selling the naked 2750 puts, my net cost on the stock would have been $27. In 2.5 weeks, if I did not have that opportunity to get assigned on the stock, I would have still generated about a 10% return over a 2.5 week period of time. That's a really nice swing trade. And I had plenty of cushion. Stock could have even dropped 10% and I still would have been fine on that trade. So what about AFRM? Do I like it here? Well, the stock has great momentum. I'm not going to chase this train. I'm going to let it continue to go. If I have some day trading opportunities to get long that stock, yes, then I'll consider it. Otherwise, that train has left the station. I'd rather focus elsewhere. The one thing that I've been focusing on is longer term swing trades where some of these laggards are starting to really gain traction. So let's zoom out and let's take a look at some of these stocks. And I also want to talk about the price behavior that we're seeing right now in QQQ. So we're going to take off the automated trend lines and we're going to take a look at some of the recent picks. Verizon is one of them. I want to do a little follow-up on this. We were long Verizon right in here. We were long the Verizon, the Verizon January. Again, this came out a few weeks ago. We were long the January 19th, the normal expiration, the $35 calls, and we were in somewhere in the 170 range. Let's get the right symbol up there. That was still AFRM. So let's take a look at the Verizon 35 calls. So they were about $1.70. Folks, you got to double on these. The options are 360 bid offered at 405. Oh, Pete said I had a double. Does that mean that I should get out now? Just be prudent with the dang trade, okay? Use your common sense. The stock is moving higher. No, I would not get out of that right now. If I started to see the market stall out, which incidentally, this is a D1 chart of the S&P 500. What is the S&P 500 doing? Is the S&P 500 flat? Is the S&P 500 going down? No, it is not. It is floating higher into year end, just like I told you it would. Could have a couple of bumps along the way. Haven't even seen many of those. We're going to get into market analysis in a minute. The point is you have a tailwind to stick with Verizon, which is a longer term swing trade. There is no reason to exit the position now because the stock is doing what it's supposed to. So you let the trade run. Don't strangle it. Let it go. You're in at a great price. So you zoom out and you take a look at where that next resistance level might be. Yeah, this could be the next resistance level. So bring it up on a chart. And if it gets to $40.24 and you have a 200% profit, which it probably would be at that level, then don't be a fool. Take some chips off the dang table. A 200% winner? Are you kidding me? Yeah, you had a nice run. That's when you can start taking some chips off the table. The remainder of the position will be much easier to manage. You're going to feel good about the trade because you banked some of those profits, and the remaining part of it going to be much easier to let run higher if the stock continues to perform. That's how you trade. That's how you do swing trades. So Abbott was another stock that I highlighted. Abbott has done very nicely. It's doing exactly what we thought it would do right in here. I think Abbott was a stock that I highlighted back in here. Probably, well, it was on, I can see here, it was on 11/22, right in here. Okay. So my point was, oh, Pete, I can't trade that. I can't swing trade that. Look at the 200-day moving averages in the way. As I said in the video, I don't care about the 200-day moving average. I care about what I think the stock is going to do over the course of the next 4 or 5 weeks. I am expecting the stock to get through the 200-day moving average. Is it going to do it today, tomorrow, next week? I don't know when it's going to happen, but when it happens, it's going to happen quickly and on volume. I'd rather be in here. Why did you get in here though? Look at this. This is really nice price action. Okay, and what does the stock tend to do? It's a very stable company. This is a laggard. Abbott Labs has all sorts of healthcare products. Many of them are even health food related. So it's stable. It has very stable earnings. And the stock runs up and sells off and runs up. Let's zoom out and take a look at the longer term chart of what Abbott does. It goes down, and then that's a good buy, and then it goes up, and that's resistance. Probably should be taking profits there, and then it goes down. If I'm a long only trader, bing, 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 bing. Yeah, those are good entry points. Okay, so we start getting into year end and we start taking a look at what the stock has a tendency to do into year end. Guess what? It's a kind of stable company that asset managers like to have in their portfolio. So even though the stock wasn't through the 200-day moving average, it had lots of other desirable characteristics, relative strength being one of them. So that's the kind of stock that we're going to be looking for right now. And when we have companies like this that are laggards, stock has been down, 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 and the market is doing this, eventually asset managers, and we're going to talk about the market now, asset managers are going to start getting worried that they have missed the train. They missed this train. What do I mean by that? Well, you had this big sell-off since August. So August through October, what did the market do? And how did it do it? How we get from point A to point B matters. You know that if you've watched my videos, super important concept. Well, it was 3 steps down, 2 steps back. 3 steps down, 2 steps back. Well, what does that tell us? So what? What does that mean? I mean, these are all just squiggly lines on a chart. They don't mean anything. It's all random. Look, it goes up, it goes down, it goes up, it goes down. I can't make any sense out of this. What this tells you is that there's some selling pressure and it gets sufficiently low to where buyers, longer term buyers, are interested. Look what this did. This is what the price action did earlier this year. This is very telling. Buy, 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 buy. There is some real buying pressure out there. Asset managers are looking to put money to work. So when you get a first drop like that, these guys that were looking for a dip to add to their positions start buying in here, and you get a bounce, and you get a pretty decent sized bounce that almost gets back up to this high. From a shorting perspective, this is a lower high double top. when we had that longer term trend line breached here and we're below AVWAP-Q, we don't start shorting aggressively up here on the notion that, oh, this is a bearish engulfing candle. That means there's a top. I'm going to start buying a lot of puts. In this one instance, yeah, you could have done well with that strategy. In most instances, you're going to get a little pullback and then another leg higher, and you're going to have your head handed to you. So what you want to do on a swing basis is you want confirmation. Well, that confirmation for a short came on that lower high double top. And then when you start breaking these upward sloping trend lines and you're below some of the major moving averages, that gives you the technical confirmation to start shorting. Okay, well, what do we know when we start getting down to the 100-day moving average? We know that there have been buyers. They're interested. That's why we got this bounce. That's why it lasted a decent amount of time. Okay, duration. Magnitude, very important. So if sellers were just relentless, you would have seen pound, pound, pound. You would not have bounced this high. You would have found resistance here and then next leg lower. Resistance here, then next leg lower. That would be telling you a much different story, and that's the kind of story that we saw in 2022. So in this case, we get a nice big bounce that lasts about 3 weeks, almost gets back to the high. All right, we know there are some buyers, and we know that this is a battleship that we're trying to turn, and that there have been lots of buyers earlier in the year. They need to be discouraged. And when sellers can discourage them and prove that, then we start to see more selling pressure. So in here, yes, you can short. Take profits here on your short positions as you start to see some support around the 100-day moving average. This bounce tells you there will be a bounce. You get this bounce. You fall short of that 100-day, that's 200-day. The blue line is the 100-day moving average. You start seeing wicks, 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 wicks. Lower high, double top. We know there's selling pressure. Okay, this is where I start looking to load up on shorts. Whoosh, another leg lower. Get that big drop in that capitulation low that we were looking for, and it happened to align with a seasonally bullish period in November. So you start looking for a bounce, and you know that there have been buyers. So you get that first leg higher, and what do you look for on that first leg higher? Well, once you get through this horizontal was support, now is resistance. Once you get through that resistance, you're through AVWAP-Q, and you start breaking above some of these downward sloping trend lines and getting above these major moving averages. You know that there are buyers, and they have been waiting and waiting for the right opportunity. So now you can start trading the long side. And you can see OneOP has actually been fantastic. It's not giving us much of a signal right here. It's just kind of flattening out. You can also see that I spoke earlier that asset managers were under allocated and that they might start panicking in here. Why? Pete, this is a light volume rally, so that means it's bearish. No, that doesn't mean it's bearish. We need technical breakdowns. That's what's bearish. We don't have any technical breakdowns. And what you'll oftentimes see is, for instance, this rally that started way back in here started to really gain some traction as you started to get through this horizontal resistance right in here. What might have been happening in there? See that volume? Decent. What might have been happening in there? Well, you had time for the market to digest gains off the low, and buyers who were looking to buy dips never got the chance. So they had to be more and more aggressive. And so then you get this big rally up. The volume to that point had been fairly light, okay? So that doesn't mean light volume does not mean bearish. Somehow, somewhere, somebody decided that light volume moves mean bearish. It's absolutely not true. light volume moves simply mean that we have to trade smaller size. We still respect the price action. So, how did the market get from here to here? Big gaps higher, and we did have some light volume because asset managers didn't want to buy into that gap. Oh, well, look, that's a big gap up. Gee, do I want to chase stocks here after this kind of selling pressure? No, I don't want to do it. And the Fed still might be tightening. Another gap up. Oof. Yeah, really don't want to chase here. They find reason. We're near the 100-day moving average. I don't want to buy here. Well, then you get the CPI report that comes out. Blam. Okay, now the chance for a Fed rate hike in December, which incidentally the next Fed decision is on December 13th, which is in 10 days. 100% chance of a pause in December, 100% chance of a pause in January. This is not my opinion. This is what the Fed fund futures are pricing in. That's a big deal. As you know from my previous videos, huge deal. That is a material change in the backdrop for the market. Because inflation is starting to abate, the Fed doesn't need to keep raising. They can ease off of the brake, and that's good for the economy. And so you get this big gap up in here. Well, now asset managers are like, oh yeah, this is the one. Okay, now I feel pretty good. I got the warm fuzzy. So yeah, any pullback from here, I'm going to be buying. I'll buy anything down to the 100-day moving average. I was looking for a dip. I was hoping for a dip because this is a really nice breakout. Everybody's been hoping for a dip. And when everybody hopes for a dip, guess what happens? You don't get a dip. Buyers have to get more and more aggressive. And they start bidding higher and bidding higher and bidding higher because they missed the boat here, they missed the boat here, they missed the boat here. So all of those gaps came on light volume. Last week, what happened? Friday, we made a new high for the year. Ding, 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 ding. Gee, I wonder where I heard that before. I'd mentioned to you back in here, I felt that we were going to see this deep trough and a capitulation and a year-end rally that could take us back up to the high of the year. I believe we're going to see that new high of the year this week for sure. I mean, we're within striking distance. So at this juncture, it's not like, Pete's a genius. We saw a new high of the year. No, back in here, that was a good call. Up in here, we're, I don't know, probably like 5 S&P points away from it. How far do we have to go to make an all-time high? That's a pretty tall order. 480, that's about a 200-point rally. Could it happen? You get a favorable Fed in 2 weeks, 10 days. Yeah. What about the jobs report? This is a weekly chart, by the way, and that's where we get that number from. And then go back into the daily chart. The point is that when we start making a new high of the year, asset managers who are under allocated start hitting the panic button because they are going to be underperforming. Everybody else has been getting long in their view, and people look at index funds for their benchmark. So if you're comparing asset manager A, your first point of reference is going to be the S&P 500. Well, if asset manager A has been missing this and missing this and missing this, I better get on this train, especially when we're making a new high of the year, because my investors, when they open their portfolio at the end of the year, are not gonna be happy if I am sitting on a pile of cash. Investors in general will be happy when the market makes a new high for the year. That is a beautiful warm fuzzy. What if the market made a new all-time high and it did rally 200 points? Well, that would really be pretty incredible, especially as it pertains to 2024, because that's going to have a lot of investors starting to come back into the market. We'll see. It's a tall order. This price action tells me we blow through. Probably going to happen this week. What do we got coming up this week? ISM services, really big number. Service sector is 80% of our economic growth. So our economic activity, very important number. We've got ADP coming in. We have the jobs report. So a nice healthy jobs report in the 200K level would be excellent, especially if the hourly wages component comes in at 0.2%, which is where it has been. That is the largest input cost for employers. It is inflationary. 0.2 shows nice, moderate wage growth. So that would be good. We also know that consumer spending has been very robust. That's what the retailers are reporting. That's what the credit card companies are reporting. We saw that reflected in Q3 GDP. Consumer spending is what's keeping the economy strong. So those are all things that we can lean on. Those are reasons for us to believe that the market is going to continue to move higher into year end. So as far as the jobs report this week, initial jobless claims have been coming in around the 218,000 range. That's the 4-week average is somewhere in there. That's really good. That tells us we don't need to be worried about a really dismal, poor, horrible jobs report this Friday. When people have jobs, they have money, they spend. It's good for banks. Banks have been one of the areas that we have been buying. So asset managers who missed this entire train and who refuse to chase, guess which stocks they're going to be liking the most? The laggards. They're going to be looking for those boring stocks that have not run up. Incidentally, QQQ has run up an awful lot. We have Amazon, Apple, Meta, Google, Microsoft, Nvidia. Those stocks comprise about 24-25% of the S&P 500. They have been viewed as safe havens. On a valuation basis, they're pretty pricey and pretty rich. So as the market starts to move higher, you start to see some rotation out of those really, really big names and in to some of these laggards. And that's the rotation that we want to take advantage of. And that's where we're going to be looking to do some swing trading. So let's take a look very quickly at QQQ. And then you can see. Remember how the market moved higher and higher and higher this week? What did QQQ do? It backed off. It is off of its high right in here. So even though the market's been moving higher, so this is the QQQ chart, you'll see that it is compressing right here at the high. Does that mean that it won't go up? It can go up, but on a relative basis, it will go up less, okay? So there is going to be money because the S&P 500, those people who are just buying index funds, you've got to buy Microsoft and Amazon and Apple because they're in the index. On a relative basis, though, you're going to see some strength in some of the laggards. And so this is your QQQ chart, compressing, compressing, compressing. Here is your S&P 500 chart. It is moving higher. Another way to do this, we trade relative strength and weakness. That's what we do. So we need to watch when various sectors are strong or weak. And you can see here, flat for QQQ, that's the overlay. S&P 500 has been steadily climbing higher. So the laggards are where we want to be. And I'm going to take the QQQ off right now. And we're going to be looking for some of those stocks right now. I had mentioned Abbott. Grinding higher. Yes, that's another one of those stocks. Very boring type of company that is making nice progress through these major moving averages. Asset managers that don't want to chase stocks that are at an all-time high are going to start allocating money to nice companies that people feel that warm fuzzy from when they open their year-end statement, like Abbott. And so it's continuing to grind higher. JPM, I've been all over the banks. I had mentioned this to you a couple of weeks ago. I really like the bank stocks, and BAC is one of them. JPM has been one of them. And let me think, let's see, JPM was on 1119. I highlighted that right in here. 11 17 whatever 11 or the 20th, it would have been a Sunday night video, was the 19th. So yes, on the 20th you could have gotten long in here right around the 151 level. The stock's up $7. This was a longer term swing trade that I liked buying in the money calls on. BAC, another bank stock. So these are the kind of stocks that we want to be in, because these guys that missed the boat there are going to be looking for stocks that are well off their high, nice, consistent companies. It's going to be a rotation into these types of stocks. So let's bear that in mind. I had a stock that I highlighted in the chat room, and that's what I'm going to use for a longer term swing trade in here. There are many that I can pick from. My gosh, the market is near the high of the year, so everything is starting to look good. What I'm trying to find is a stock that's going to perform well over the course of the next 2, 3, maybe even 4 months. So it's a laggard. I'm going to put up one stock, and I want to encourage you to go to my Twitter feed. In the description of this video, you'll see a link to it. I'm going to try and highlight a swing trade in Twitter. I'm not following it up. I don't want to micromanage these positions. That's why I tend to do a lot of bullish put spreads. Put it on, you let time decay work for you. I had posted a Home Depot bullish put spread. It's above the AVWAP-E. It's above the 200-day moving average. It's above the 100-day moving average. I like this nice gradual drift higher. Home Depot has been able to gap up on earnings and hold that 100-day moving average. And now buyers are getting more aggressive. Creep, creep, creep. So here on Wednesday, with the stock at roughly 314, I liked selling an out of the money bullish put spread, and you'll see that in my Twitter feed. Looks fantastic, and that gave me one support, two support levels that I could lean on, and that bullish put spread was selling the 302.50 300 bullish put spread, and going out to the December 15th expiration and being able to bring in a 50-cent credit for that. Really nice spread. Well, obviously, with that move on Friday, that trade is no longer there. You had to be in here, and you had to know what this price action was telling you. Pete, you still had the 100-day moving average above. Why would I want to sell a bullish put spread before it's gotten through that resistance level? Because once it gets through that resistance level, and I'm expecting it to get through that resistance level, and I wait for that, I can't sell that spread down here anymore. And I would much rather be short that spread here than I would be to sell this spread on that move, because I've got greater distance. It's already working for me. So yeah, I want to be in it a little earlier. It's a very, very nice trade. So what I'm going to show you today, it's got relative strength, which is one of the most important things that we do. But again, in the spirit of longer term swing trades, We have to have a little bit of a different mentality. Okay, so when we day trade, it is sniper time. It is absolute precision time. Our entry has to be fantastic. We need that momentum. We need those breakouts on heavy volume. And we're simply trying to take a chunk out of that follow to remove. Swing trading is a bit different. So we're taking a much longer term perspective. So the stock that I have queued up for you is AMR. Oh, excuse me, AAL. American Airlines. Whoa. Look at this dog. That is some nice, tight, heavy selling pressure. Orderly as heck. And look at this rebound. It's nothing. There's nothing to it. Mixed overlapping candles, choppy as heck, tails and wicks. What is Pete doing with this dog? And it's an airline, for crying out loud. Airlines are never a good long-term investment. Well, here's what has me looking at AMR. We've started to see that the stock has been able to move off of this low, and we have a longer-term downward sloping trend line that's been breached to the upside. And it might even be, well, let's see what we had. Well, we do have a nice breakout through this high minus trend line. We can also see if there have been any past trend lines that have been breached. Yeah, there was. And on the way down, we had many, many breaches, which told us that this momentum was legitimate. So from a trend line standpoint, and a lot of discussion on trend lines and algo lines and what are they and how do we draw them. Here's the bottom line. Folks, it is one checkbox. These trend lines are one little checkbox. They are not the end-all, be-all indicator. We look at relative strength. We look at volume. We look at horizontal support and resistance lines. We look at AVWAP E, AVWAP Q. We take a look at the major moving averages, the 100-day, the 200-day. Those are all part of the decision-making process. Earnings reactions, gaps. Trend lines are just one little part of it. I love my automated trend lines, but there are many different ways to draw trend lines. So if you're getting all freaked out that you don't have one tiny piece of the puzzle, relax. So let's take a look at some other factors that are considerations when we're looking to do a swing trade. So yes, I'm good with it coming off of this low here. We're going to put up real relative strength. And there you can see that the stock is starting to move up towards that zero line. If you go into a 1 hour chart, you're going to see that it's well above that zero line. So on a 1 hour basis, it's already been strong relative to the market. You can also see that reflected in the price action. And if you put up a 1 hour chart of the S&P, you would see kind of gradual, boring move higher. Stock has been able to do this during the same amount of time. So yes, on a relative basis, it is strong. Well, that has me interested. Through this minor resistance point, nice. Had a good bunch of volume on Friday, so that tells me that asset managers who are looking for any kind of value might be interested in AAL. What else do we have working in its favor? Well, let's take a little zoom out here and let's get a feel for what the stock does longer term. We are looking for a longer term position that we might be able to swing trade for a month, maybe 2 months, maybe even 3. I mean, we've got a nice market tailwind right now. We have a year-end rally. Where might money go into? Well, if you take a look at a very long-term chart of AMR, you're going to notice something. And that is that the stock has a tendency to make these big swings. Okay, this was COVID. I'm almost positive of that. Yeah, this is all COVID related. So there was no air travel. But in general, even if you strip this gigantic move out, which this move does diminish what the stock does normally, it sells off and then it rallies. It sells off and then it rallies. Sells off and then a big rally. It sells off and then a rally. Okay, well, gee, that's a pretty nice entry point. 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 It is a boring ass company. It is an airline. Okay? They're not figuring out the next cure for cancer, but they have good periods and they have bad periods. So I wonder if people travel a lot into the holidays. Yeah, I think they do. In fact, I remember reading that over Thanksgiving, air travel was at its highest level since COVID. Ooh, that's a good piece of information. And we know that consumers are spending money. Oh, I wonder if they might be spending money on air travel. Well, this looks like a pretty decent horizontal support level that I can lean on. This $12 price point. Yeah, we're above it. Nice. Okay. So those have tended to be good buying opportunities. And we're looking for a move, maybe not as big as that, certainly as big as that. Well, a move like that gets us into the $15 range, get up to that 100-day moving average. Yeah, that would be a decent target to have for this particular position. So I don't just stop my analysis there. If my premise is that there's going to be decent holiday traffic and that could spark a move higher in the stock, what would be the next logical step? And this is what all of you have to do. You're traders. You have a brain. You need to use your brain. You need to take that curiosity and then go explore and see what has happened historically. Look at what happens from November, let's say through year end. You're going to find you've got some pretty decent movement. I'd have to go back every year and I would have to check to see what the stock has done. Yeah, pretty decent movement. Is that alone enough to hang my hat on? No, it's not. What else do we know about airlines? Well, what is their major input cost? Fuel. Fuel. Well, USO is an ETF, so I'm going to put AL up, and then I'm going to put oil futures up. Very easy to see. What do these stocks tend to do when oil prices go up or down? Seems like a logical overlay. Oh, that gray line is the price of oil. When oil goes up, AMR goes down. Very basic fundamental analysis, okay? I'm not giving you any gigantic trade secrets here, but look what oil prices have been doing recently. Nice. Okay? Take a look at what has happened previously. And there is a lagging effect to it, but oil prices creeping higher, you get that drop. Oil prices stabilize, stock starts to jump. No, oil continues to move higher. Okay, you get this big drop down in the stock. Now, each one of these airlines, they have their own business models. They have their own unions. They have plenty of issues Some of the airlines are run more efficiently and better than others. So yes, you can look at United Airlines, you can look at Delta, you can look at Alaska Air. Those might provide you with really nice opportunities as well, and they might actually prove to be better than AAL. So take a look at the other airlines, take a look at the technicals, see which ones you like the best. And here you can see ALK, support, support, support. Nice horizontal support level here. Was resistance, we're above it, now it's support. So ALK could be a perfectly good example, and on a D1 basis, you can see that it is poking above that zero line. So now what do I do with this information? So I'm going to put AAL up, and I'm going to take off that overlay, and we're just going to look at the stock, and we'll zoom back in on the chart like so. So I like it here. I love that move higher right in here. I love that breakout on a closing basis through this horizontal resistance. What did you just say, Pete? Closing basis, what is that? Well, I'm ignoring these wicks, okay? I just want to see where the stock closed. Does that mean you only use the closing prices, Pete, when you draw trend lines and stuff? Because I need to know this. Use whatever you want. You could use the highs and draw your lines in here. For me, where a stock closes tends to be more relevant than what it did during the day. And especially when I'm swing trading, I don't so much care what the stock did during the day. It's where it closed that matters. And when I get a long green candle closing on its high, this is a nice breakout on a closing basis. And even if you use the wicks, it would clear all of those as well on heavy volume. And we've seen that the relative strength is building. Lots of lessons for you today. So I like the market. I like that the market is moving higher. Let's do a quick 5-minute analysis of how Friday unfolded. You go into a 30-minute chart and you look at, okay, here's where the market opened Friday. Compress, 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 boring as hell, light volume, nothing going on. Friday's going to end up being the same thing. Well, Friday, we had some beginning of the month fund buying coming in. We had that actually Thursday. So when you get volume, it tells you that even though the price action might be choppy, you have a chance for a sustained directional move. So you get through the open, gap down. Gap downs are our favorite day trading setup because we are able to join the longer term market uptrend at a good price, and that gives us an opportunity to evaluate relative strength. All good stuff. So yes, when we see a gap down in an upward trending market, goody goody. So get this nice little bounce, get this bearish 1OP cross. Let's see what happens. A little bid check. Some long tails tell us that they try to hammer the market and boing, it bounced right back. Try to hammer it down, bounced right back. So at this juncture, we've got a bullish 1OP cross. We get this nice candle to a new high of the day on decent volume. So this is where we're entering long positions and we're feeling pretty good about what we're seeing so far. Now you get the new high of the day, you got a full bullish cycle. This is where you keep adding to your positions, stocks that have been moving higher. Get this bearish cross here, I'd mentioned to everyone, based on this price action and the fact that we're near the all-time or the high of the year, tells me that we're going to continue to push higher. This is likely to be a bearish divergence. Market gets up to the high of the day. Now we're looking for a minor pullback. Found support well above the VWAP. So if sellers were aggressive, whap, 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 we would have come right down to the VWAP. That didn't happen. Instead, we hugged the high, and that told me that we were likely to close near the all-time high, which we did. And we also know that asset managers are hitting the panic button a little bit because they have not participated. So I love the market backdrop. There are going to be a lot of stocks that I highlight for swing trading that are boring companies. Okay. One that I like, it hasn't done much in here, but I like the notion of owning something boring like Pepsi. They make cola, they make food snacks. This is like a consumer defensive stock. And look, it's down near the low. So, yeah, maybe on Wednesday I'll be highlighting this stock. It's compressing right now. When it goes, everybody's going to be looking at it post breakout, and you'll get a long green candle in here, and they'll go, hey, you know what? I like owning Pepsi. Pepsi's a relatively good value in here, and it has not participated in the market rally. And people gotta have their Cheetos. Those are my Cheetos. They're not going to stop buying Cheetos and all the different snacks that they have. This is a very nice conservative company. This is the type of stock that asset managers don't have to look at and fear that they are chasing when the market is making a new high. And you can see, same thing as with AMR. Sells off, rally, sells off, rally, sells off, rally. Okay, sells off. This is a pretty good entry point for a stock like Pepsi. And then you buy some longer term calls. You're waiting for a little bit better price action in here because it's still compressing. So there are other companies that are breaking out right now. But yeah, could you come in and start buying some longer term calls on that? I'd like to see it gain just a little bit more relative strength in here on a D1 basis. You can see on an H1 basis, yeah, it's not really there. I mean, the stock didn't do a whole lot Friday, but when we start to see that volume come in, yeah, companies like this are going to be great. A lot of the consumer defensive stocks have been badly beaten down. So, tech, be a little bit more careful. You might see some money flowing out of some of the big tech names. That doesn't mean they're going down. It just means that they're not where you want to put your money. They are not going to be the fastest horse in the race. And that ultimately is what we're looking for. And when we see that institutional money going in to some of these laggards, that also gives us that safety net so that if the market does have a hiccup in here somewhere, those stocks are going to continue to hold up well because money is flowing into them and because they have lots of upside potential. So that's all I've got for you today. I know it was a long video. We're transitioning into more of a swing market. I'm going to be adding some swing searches in 2024, perhaps even having rule bases behind them. If you see a stock in this search, this is when you want to do your bullish put spreads. This is what you should be looking for. These are stocks that you might want to consider for longer term call buying, that kind of thing. So that's one of my projects for 2024. I had thought about doing that 2 years ago, but with a bear market coming up and with most people liking to trade swing trades from the long side, I thought it best to hold off on that and to really focus on day trading. You have to take what the market gives you. And so for the last year and a half, 18 months, we've had decent opportunities on the day trading side, but not much on the swing trading side. That's going to start shifting and favoring a lot more swing trades in the future. So we're going to run with it. I hope you can make it for the streaming live event on Wednesday. I plan to have more of them on Wednesdays. We may have some hiccups. There are a lot of moving parts to getting the live stream going, especially when there are two presenters. So we'll see how things pan out, but we hope to have some decent picks for you. I like that AMR pick, so let's wrap that up. How would I approach AMR? Well, I'm going to bring up the option chain and we'll take a look at some very long-term options. And we'll go into the March expiration. So let me get AMR up. March expiration, holy cow. This guy's going way out in time. I keep putting AMR up instead of AAL because AMR, way back in the 90s when I was trading, was the symbol for American Airlines. I like buying the $10 calls. Okay, they are in the money. Let's bring up the AAL chart real quick. They're in the money by about $3. So you're paying 40 cents over parity. They're worth $3 intrinsically. You're paying $3.40 for them. They're going to have a very, very high delta. You've got almost 4 months of life in these particular options. And since they're going to move point for point with the stock, if I'm looking to get up to, let's say, that $15 price point, at minimum, those options should be trading at $5. So $5, and I'm in for roughly 340. That's about a 50% potential profit based on the amount of money I'm putting into the trade. Gee, anybody interested in a 50% return? No sweat, lots of time, don't have to worry about every tick. Yeah, I think a lot of people are interested in plays like that, so we're going to be doing more of them. Thanks so much for watching the video, everybody. I'm going to be seeing you hopefully Wednesday during the live event. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.